Alright, what's up guys? This is Scott here again with my next live trading video, and for this one here, I'll be showing you all two different ways that you can use iron condors to trade directionally. Right, so basically if you find yourself in a situation where perhaps you're looking at some stock and you do want to lean in some direction, either bearish or bullish, but you don't want to go with an outright directional trade, perhaps like a call credit spread or a put credit spread, a short call or a short put, things like that, then again, in those situations, a directionally skewed iron condor might be the best fit. And as you'll see in this video, these kinds of iron condors do give you some added benefits over a purely directional kind of trade. So for example, they'll give you a higher chance of profit if you are directionally wrong on the position. And then also, they basically give you a more muted or more mitigated directional bias to your overall position. So again, if you are a bit more hesitant about leaning one direction or the other, or perhaps you're only moderately bullish or moderately bearish, then again, these kinds of iron condors are going to be a great choice. Now, real quick though, in case any of you guys are interested in getting some free stock or some free money, I've got some very cool opportunities and promotions in the description of this video, so check them out below. Right, for example, if you want $200 of free stock from Tastyworks or a bunch of free stocks from Webull, free money from SoFi, etc., then again, check out the links in the description of this video. And then secondly here, in case any of you are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Alright guys, so now we'll dive in here, and the main stock I'll be using in my examples is going to be QQQ, which is an ETF that tracks the NASDAQ index. And so briefly here, we'll zoom in on this chart. And so recently, I've been very focused on these two lines right here in white. This is a major support level on the Qs at around $285 per share, and this major resistance point at around $312 per share. And so given that right now we're on the upper end of this range right here for the Qs, perhaps now could be a good time to place a bearish trade to see a short-term reversion, or basically a short-term sell-off back down to the support level right around here. That being said, as you can also see, basically for the past 2 weeks, we've been stuck in a very tight consolidation pattern just hovering below this major resistance point. And as a result, it's very difficult to assess what the market is trying to do next. I mean, obviously, it's trying to fight and get above this resistance here, but so far, for almost 2 weeks now, it has failed every single time. So perhaps eventually the market might give up here and finally return lower. So basically, because it's very unclear right now what's going to be happening next, that's why you might want to consider placing a trade like an iron condor that has a slight directional bias to it, or slight bearish bias, right? Because again, I personally do think the market will return lower from here, but I totally could be wrong. So that's why I don't want to place an outright bearish trade, like for example, a call credit spread. So now at this point, let's come over to the trade tab on the Qs and take a look at the option chain here. And for this trade, we'll go into the July expiration cycle with 36 days left to go. We'll unfold that tab here, and then we'll scroll down to the near at the money options. There we go. Now, in order to construct an iron condor with a directional bias to it, the most important thing to look at is the deltas of the contracts. Right, so as you can see here in this column, these are the deltas of all these call options here. Same thing on the put side, more deltas. And essentially the delta on a contract will tell you by, roughly speaking, how much the price of that contract will move for a $1 change in the price of the underlying stock, or in this case, the ETF QQQ. So for example, with this 295 strike put option here, the delta is 33. So again, roughly speaking, if QQQ goes up or down by $1, then the price of this put option will change by about $34 now. And ultimately, to give your iron condor a directional bias, you want to have your deltas on one side of the iron condor to be larger than the other side. And specifically, if you want your iron condor to be bearish, then you want the deltas on the call side to be larger than the deltas on the put side. And then conversely, if you want your iron condor to be bullish, then you want the deltas on the put side to be larger than the deltas on the call side here. So at this point, let's go ahead and set up an actual iron condor trade, and then we'll use the Analyze tab to show you and actually quantify how bearish this iron condor is going to be. Now, in terms of selecting my strikes, let's actually first come back to the charts real quick here and take a look one more time at the support and resistance levels. So again, resistance is at around $312 per share or so. So that means for the call side of my iron condor, specifically for the short call option, I want to pick my strike to be above that point. And then on the downside here, support is at around $285 per share. So in a similar fashion, with the put side of my iron condor, I'm going to pick both of my put strikes to be below this point here. So with that said, we'll come back to the trade tab and make this trade official here. And so on the call side here, I think I'm going to pick my short call strike to be at around 325. So that's a full 13 bucks or so above that resistance point. And then on the put side here, again, support is roughly around 285. So I'll go down to maybe the 270 strike, which is 15 bucks away. And then also take a look at the delta of my put option here compared to the delta of my call option. Right, with a call delta of 25, this is more than double the delta on my put option of only 12. And again, this here is what's going to give my Iron Condor a bearish bias. So now I'll come down to the call option here and right click and then go to sell and Iron Condor. And here we go. This is the order to sell my entire Iron Condor. Again, with the short call option, it's going to have a 325 strike. And for right now, we'll make the width of these spreads on both sides here exactly $10 wide. So that means for my long call option, I'll make this with a 335 strike right there. Again, $10 wide. And then for the put side here, specifically the short put option, that's going to have a 270 strike. And then for the long put option, we'll make that a 260 strike, also 10 bucks away on the downside. And then as you can see here, for putting on this position, I would collect about 300 bucks in credit, a bit less. And then now in terms of analyzing just how bearish this Iron Condor is, we're going to right click on this order and then go to Analyze Trade. Click on that. And that brings you to the Analyze tab here where you can see up top a visual diagram of the exact risk profile of this Iron Condor. And then down below here, you can see the order once again with some added metrics. And in particular, if you go over to the right-hand side and look under this delta column, this is the total combined delta of the entire Iron Condor position. So basically this number here factors in the deltas of all four of the individual deltas of these contracts here. So essentially what this means here with a negative delta, that means this Iron Condor is indeed leaning a bit bearish. Otherwise, if the delta here was positive, it would have a bullish bias. And keeping in mind what the delta means for an individual contract, right? Again, it shows you how much the price of a contract will change for a $1 move in the price of, in this case, QQQ, and the delta for a combined Iron Condor means pretty much the exact same thing. Except in this case here, the delta shows you how much the entire value of this whole position will change for a $1 move in QQQ. So essentially, if this ETF falls by $1, then the price of this entire Iron Condor will fall by about $6.20 or so. And of course, that's what you want to have happen as an option seller, right? Whenever you sell an option or a series of options like an Iron Condor, you always want the price of your position to fall in value. And the same thing would apply if this Iron Condor here was a bullish skewed Iron Condor and this delta was actually positive, which in that case, if the Qs here actually increased in price by $1, then same thing, the price of this full Iron Condor would fall by about $6.70. So basically the purpose of the negative sign here is just to show you which direction this Iron Condor is leaning, either bearish or bullish. Negative means bearish, positive means bullish. But again, in either case, if you do get the directional move correct with this Iron Condor, then the value of this whole position will fall by roughly this amount. But now let's compare this bearish skewed Iron Condor with an outright bearish call credit spread and still try and collect the same amount of credit. So again, with this Iron Condor, the total credit is around 280 bucks or so. And that means if we come back to the trade tab, and if I wanted to sell a call credit spread to collect roughly the same amount of money, that means I'll have to pick my strikes to be much closer to the current price of QQQ. So now instead of selling the 325 strike call option, perhaps I'm going to sell the 319 strike. Let's see what happens here. I'm going to right click and then go to sell and vertical. And here we go. This is my order to sell one call credit spread with a short call strike of 319. And again, to keep the risk the same, I've made this call credit spread exactly $10 wide as well. So therefore the long call strike is 329. And there you go. As you can see here, the total credit collected is around the same amount, 280-ish bucks. And so at this point, we'll right click on this order here and go to Analyze Trade. And now here we can directly compare the deltas of these two different positions. So again, the bearish skewed Iron Condor has a combined delta of negative 6.6, but the call credit spread has a delta of 13.3, over twice as large. Moreover, even though the credit is basically the same between the two trades here, obviously with the call credit spread, your strikes are much closer to the current price of QQQ, which right now is trading at around 306 bucks per share. So therefore, if you're totally wrong on these trades here and the Qs do decide to climb higher, then there's a much greater chance that your call options with the credit spread here are going to get breached compared with the call spread of the iron condor. So this here is exactly what I was talking about earlier when I said that a skewed iron condor has a greater chance of still making a profit even when you are directionally incorrect on the trade. And that's simply due to the fact that with a skewed iron condor, you can pick your strikes much further away from the current stock price compared to a regular credit spread. And then also with the deltas here, again with a call credit spread, this is going to be a much more bearish trade than the iron condor. And so if the Qs fall by $1, you're going to make about 13 bucks on the credit spread compared to only $6.50 on the iron condor. And so this here is also what I meant that with a skewed iron condor, it's going to give you a more muted or more mitigated directional bias compared to an outright directional trade like a credit spread. And of course, that also means if you are directionally incorrect on the trade and if the Qs here climb higher, the losses you will face on your iron condor will also be less than with the credit spread. Right? Because in that case, if the Qs actually increase in price by $1, then the price of this iron condor will also increase by about $6.50. And that's not going to be a good thing for you as a seller of this iron condor. But again, with the call credit spread here, if the Qs increase by $1, then the price of this spread will increase by over $13. So obviously with this call credit spread, your losses will be greater if you are directionally incorrect. And then finally in this video, there is a second way to make your iron condor lean directional as well, and that is to increase the width of one of the spreads. So for example, in this case, both the call credit spread side and the put credit spread side of our iron condor both have a width of exactly $10. But perhaps I'm willing to take more risk on the call side here because again, I am still leaning bearish on the Qs. So now instead of making this spread 10 bucks wide, perhaps I want to make it 15 bucks wide. So therefore, if I change my long call strike here from 335 to 340, as you'll see, two things will change. Number one, I will now receive even more starting credit. And of course, that's because I'm now taking more risk on this trade here. And then number two, my delta on the entire iron condor has also increased. Right beforehand, it was around 6.3 or 6.5. Now it's jumped all the way to 10.5. And now it's almost as bearish as the outright call credit spread. But still, the one thing that has not changed is the fact that if I am directionally incorrect on this trade, my short call strike with the iron condor of 325 is still much further away than the short call strike as part of the call credit spread. So basically, by constructing my iron condor this way, I have almost matched the directional bias as with the call credit spread by itself, but I still have a much higher chance of making a profit if I'm wrong on the trade. Right, my iron condor still allows the Qs to climb even higher than with the call credit spread, and I can still walk away with a full profit on the trade. So definitely feel free to play around with this stuff in ThinkOrSwim here or in your own trading platform because there are tons of different ways and combinations you can construct an iron condor with different strikes or different widths of your strikes to get the perfect deltas that you want. And then once you have decided on the deltas or the directional bias that you want with your trade, at this point you can simply right click on the order again and go to confirm and send. So I'll go ahead and send in my iron condor as is. Buying power effect is about 1,200 bucks, which is fine. And then we'll go to send. And there we go, just got filled at 342. Awesome. And then actually one more thing I'll do is I'll come back to the monitor tab and find that new position, which is down here in the unallocated section. I'll right click on that and then go to create closing order. And then also go to this first option here to buy back the entire iron condor on QQQ. And here we go. This is my entire closing order to buy back the whole position. And as usual, I'll try and do so for half price. So half of my starting credit of 342 is about 170, just rounding down a little bit there. And then lastly, we'll make it a GTC order so it's always in place and confirm and send. All done. And so there you go. That's how you can trade iron condors in a directional manner in the cases where you're only moderately directional in one way or the other. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want some free stock or some free money, then check out the cool opportunities and promotions in the description of this video. And also, if you have an interest in taking some detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.